Sir, very happy morning to all.
Happy morning, sir.
So we are moving into a very important topic called as computation of total income. This is what the hero of tax is all about. To do this sum, you should know the income tax. This will be the first question. This will be the first question for 14 to 15 mark in examination. I will make you an expert by doing at least 20 questions from computation of total income. Just enjoy question number 1. ILT Limited is engaged in manufacturing. If you are engaged in manufacturing, you are entitled for additional depreciation. In order to enjoy additional depreciation, assessee should be engaged in the production or manufacture of any article or thing or generation or distribution of power. This is what explained in section 32 subsection 1 class 2A. The P&L account of the company for the year ended 31st March 2024 shows a net profit of 405 lakhs. So the net profit as per P&L account is 405 lakh. Following information and particulars are furnished to you. You are required to compute the total income of the company for assessment year 24-25, indicating reasons for treatment of each item. So basically, this is how a question will come. Net profit as per P&L account will be given. And they will say that we have debited so many items to the P&L account. If it has to be disallowed, it has to be disallowed. Number 1, a group free air ticket was provided by a supplier for reaching a certain volume of purchase during the financial year 23-24. So you have purchased something from the supplier. You have achieved the target, my dear lovable students. So they have given some group free air ticket. The same is encashed by company for 10 lakh in April 2023 and credited to general reserve account. So what company said that, no, we are not ready for what interested for purchase and flying and all, tour and all. We don't want air ticket. Encash it, give us at what? Give us to what? As an cash. How to deal with this? Sir, value of group free air ticket provided by a supplier is taxable as business income under section 28 clause 4. Section 28 is a charging section of the PGBP. Clause 4 is talking about gift. G-I-F-T, gift. How many letter? 4 letter. That is why it is clause 4. I have explained in the class. Any gift or perquisite has been received in the course of business or profession should be taxable as PGBP income. So charging section 28 clause 4 are specifically saying that if you are getting any gift in the course of business or profession, then it should be taxable as PGBP income. So my dear lovable students, for that only TDS under 194 are perquisite. If it exceeds 20,000, the person has to deduct TDS under 194 R. As the value of any benefit, whether convertible into money or not, arising from the business is taxable as business income. So as per section 28 clause 4, any gift or perquisite received in the course of business or profession should be taxable as PGBP income. Right? So this 10 lakh should be added to the net profit. So to the net profit of 405 lakh, we have added how much lakh? 10 lakh. This is the first adjustment. I am moving into the next adjustment. A regular supplier of raw material agreed for settlement of 8 lakh instead of rupees 10 lakh for poor quality of material supplied by the previous year, which was not given effect in the running account of the supplier. Beautiful. Sir, some supplier has supplied some raw material to us. The total value was 10 lakhs. But there was some quality issue. He said that don't pay us 10 lakh, pay us only 8 lakh. You can take how much lakh? 2 lakh. 2 lakh. This is like discount received, remission or cessation of trading liability. Remission or cessation of trading liability as per section 41 subsection 1. Sir, deemed income. I will be connecting the entire PGBP, capital gain and IFRS in this 20 question. And I promise to you, this is my promise. No new adjustment will be coming other than this 20 question. They may ask 1 or 2 new adjustment. That new adjustment will be from the statutory update, which is the case law what has been given in that. From that, they may insert one. If you are not able to answer that one adjustment, what is new, still no problem. You will be able to get 80 to 90% of the total mark. Out of 14 mark, you will be able to get 12 mark, 11, 12 mark. That is more than enough according to me from this area. So, a regular supplier of raw material agreed for settlement of 8 lakh instead of rupees 10 lakh for poor quality of material supplied during the previous year, which was not given effect in the running account of the supplier. That means for this what? 41 subsection 1, let me write the sections in different color. 41 subsection 1, which is remission or cessation of trading liability. This is 28 clause 4, any gift or perquisite received on account of business or profession, right? So this 2 lakh should be, sir, added to the net profit because this is a remission or cessation of trading liability. Shall I proceed? We are reading the notes. The amount waived by the supplier of raw material is a deemed income under 41 subsection 1. As expenditure was allowed as deduction in the last year and there is a benefit by way of remission or cessation of trading liability, the fact that was not given in the running account of supplier is not relevant. Because you will not provide in the running account of the supplier, because if you provide, it has to be treated as discount received. Then it will increase in the income. That's why you are not providing in the running account of the supplier. That's why we are having section 41 subsection 1, remission or cessation of. So we have added that 2 lakh to the net profit. I'm moving to the next one. So this section is talking about PGBP. This is talking about PGBP, right? We have discussed in depth of this. I'm moving into the third one. Andhra Bank sanctioned and distributed a term loan in financial year 2021 for a sum of 50 lakh. Interest of 8 lakh was in arrear. We know that 43B. As per section 43B, sir, any interest debited to P&L account but not paid should be added back. Any tax duty, cess or fees payable. Any interest payable to scheduled bank. Any interest payable to financial institution or NBFC. Sir, any railways at the end. Any amount payable to the employees, correct? Bonus or sir, commission to the employees. And next one, railways. So in that one amendment they have added, new clause has been added called as clause H. Interest of 8 lakh was in arrear. The bank has converted the arrear interest into a new loan repayable in 10 equal installment. So 8 lakhs divided by 10 comes to every installment is 80,000. During the year, company has paid 2 installments and the amount so paid was reduced from the funded interest in the balance sheet. That means at the balance sheet adjust pannirukanga and a P&L adjust pannala. So, the year in which they have not paid the interest, that 8 lakhs would have been added back. In the year of actual payment, that can be claimed as a deduction. So this is the year, but not the entire amount of interest has been paid. So 80,000 into 2 comes to 1,60,000, my dear lovable students. So this 1,60,000 has to be reduced while calculating the PGBP income. That's why 1,60,000 has been reduced. Less amount of deduction allowable under section 43B. Interest on loan due to any scheduled bank is allowed as deduction if such interest is actually paid irrespective of method of accounting followed by the assessee. Conversion of arrear interest into a fresh loan by a bank cannot be considered as actual payment of interest. However, the amount of funded interest, that is converted loan, actually paid is allowable as deduction. Hence 1,60,000 being 2 installment, 80,000 each actually paid is deductible. So conversion of interest payable into loan will not tantamount to actual payment. எப்ப அந்த convert பண்ண loan நீங்க உண்மையிலே pay பண்றீங்களோ அப்பதான் brilliant, sir. I'm moving to the next adjustment. Are you clear with 28 clause 4? Yes, sir. Clear with 41 subsection 1? 43B? I'm moving into point number 4. Company remitted 5 lakh as interest to a company incorporated in USA on a loan taken 2 years ago. That means the company has paid some interest to a non-resident. We know that. If we make any interest to a non-resident, we are supposed to deduct TDS. Tax deducted under section 195 because 195 is the respective section, sir, for the non-resident, correct? From such interest has been deposited by company on 15th July 2024. Have they deposited before filing the return of income? Yes, sir. Because company's due date for filing the return of income under 139 subsection 1 is 30th of October. 31st of October. 31st of October. So, my dear lovable students, this is before filing the return of income. The said interest was debited to P&L account. Since they have complied with the Charter 17B provision, no need of 100% disallowance under 40A subsection 1. Are you able to see the full view of the act? Yes, sir. That's what I said. This topic can be done only at the end. Lot of things will be coming, but we would have completed everything. Sir, nothing should be added back. Interest payable outside India to a foreign company is allowable. Since tax has been deducted on interest payable outside India to a foreign company during the previous year 23-24 and same has been deposited before the due date of filing return of income under 139 subsection 1. Disallowance under 40A subsection 1 is not attracted since the interest has already been debited to P&L account and no further adjustment is required. Are you able to get the flow? I am moving into the point number 5. This is with regard to, sir, 40A subsection 3, cash payment exceeding 10,000 or 35,000 as the case may be, read with rule 6DD. Read with rule 6DD, exception. Super, sir. Sandeep, a sales executive stationed at head office at Delhi, was on official tour, not personal tour, official tour, in Bangalore from 31st May 2023 to 18th June 2023. So May 31st to June 18th. Is this more than 15 days or less than 15 days? More than 15 days. That is an important condition which we have already studied. And 28th September 2023 to 15th October 2023. Is it more than 15 days? Less than 15 days? More than. For the business development. Company has paid Sandeep's salary in cash from its local office at Bangalore for the month of May, payable on 1st June, and September, payable on 1st October, amounting to 45,000 and 47,000 respectively. Very important condition, net of TDS and other deduction. Already they have deducted the TDS. Sandeep has no bank account at Bangalore. These were included in the amount of salary debited to P&L account. We are having rule number 6DD, exception to cash payment exceeding 10,000 or 35,000 as the case may be. There what they are saying, if you are paying to any employee which they have not worked in other places than the other place of their work more than 15 days, then cash can be paid as salary and disallowance under 40A subsection 3 will not get attracted. Salary paid to employees Sandeep is eligible for deduction. Disallowance under 40A subsection 3 will not apply. In respect of payment of salary to sales executive in cash, no disallowance under 40A subsection 3 is to be made as the payment fall within the scope of rule 6DD. Salary paid to him in cash is allowable as the executive was temporarily posted. This is point number 1. Enna posted? For a continuous period of more than in Bangalore, which is not the place of his inner duty. Further, tax was deducted from such salary under what section? What is 192? TDS on salary, and he does not maintain any bank account in what? Bangalore. So no disallowance under 40A subsection 3 is attracted in respect of such salary. Look how many sections they have referred. Look, they have referred 40A subsection 3. Do you know? Yes, sir. They have referred rule number 6DD. Do you know? Yes, they have referred section 192. Do you know? Yes, sir. Again, they have concluded that 40A subsection 3 will not be applicable. We have done all the section in the class. Correct? I'm moving into that. The last point, I think. Company has contributed 50,000 by account pay check to an electoral trust, 80 GGB, 80 GGC. Contribution to political party by Indian company, contribution to political party by other than Indian company. Right? Chapter 6 reduction we have completed. And same stand included under the head general expenses. No, this should not be debited to general expenses. Correct? First, it should be in the back. And it can be claimed as a chapter 6 reduction under 80 GGB or 80 GGC as the. So, I am adding back contribution to electoral trust is not an allowable expenditure while computing business income. Hence, the same has to be added back since it is included in the general expenses. So, 0.50 lakhs has been added back. I find out the subtotal, reduce the 43B. I got the business income of 415.90 lakh. Less deduction under chapter 6A, deduction under 80 GGB in respect of contribution by assessee to an electoral trust 0.50. Total income is 415.40. This is the base question. You just think the first adjustment is talking about 28 clause 4, second adjustment 41 subsection 1, third adjustment 43B, the fourth adjustment with regard to the TDS part 195 and 40A sir clause 1. Right? Then Sandeep 40A subsection 3 read with rule 6DD and 80 GGB or 80 GGC. This is a nice question to start with the computation of total income. Trust me, after 20 questions, this topic will be the most easiest, and that 50 mark will be in your pocket. The only thing what you are supposed to do is, I will be doing all the 20 questions. If you really want that 15 mark in exam, at least do one question a day. Sit and write one question a day with proper notes, with proper timing also. Then the flow in the examination will be very level. I will make you master in that area. I'm moving into illustration number 2. X Limited, a manufacturing company, they are entitled for points will start repeating, which maintains account under mercantile system at net profit of 12.5 lakhs. So what is the net profit as per P&L? 12. For the year ended 31st March 2024. You are required to compute the taxable income of company for assessment year 24-25 after considering the following information, duly explaining the reasons for each of the adjustment. Advertisement expenditure incurred rupees 60,000. Paid in cash. 40A subsection 3. Cash payment exceeding to the sister concern, related party. 40A subsection 2, related party transaction. The market value of which is 52,000. So 8,000 unreasonable should be disallowed. As per what section? 40A subsection 2. So what 40A subsection 2 is saying that I will add back 8,000. Then what 40A subsection 3 is saying that I will add back remaining 52,000. 50? So the question arises, sir, will 2 section will be applicable or the entire amount will be added back as per 40A subsection 3? Are you understanding what I am saying? If 2 sections are applicable, if you give the priority to the 40A subsection 2 first, what you will add back under 40A2? Okay, amount, okay, 8,000. Excessive amount. After that excessive amount, what is the balance available? There may be a chance that the balance may be less than 10,000 or 35,000 as the case may be. Are you understanding? So, who will not, sir, get the chance to tax? 40A subsection 3 will not have the chance to tax. Are you really with me? Yes, sir. Yes, sir. So will the entire amount will be taxed in 40A subsection 3? Question arises. Are you understanding? Or MSD versus Ganguly Dada will be applicable. What is MSD? More specific definition versus general definition. I am having more specific 40A subsection 2. I am having more specific 40A subsection 3. Will this will be applicable or later the better will be applicable is the discussion. Clear? What is that? What is the net profit as per P&L? 12,50,000. Add items debited to P&L but not deductible or income to be taxed. Payment of advertisement expense of how much? 60,000. Rupees 8,000 being the excess payment to a relative disallowed under 40A subsection 2. That means MSD versus Ganguly Dada. So 8,000 in the section disallowed. As a payment is paid in cash, since the remaining amount of 52,000 exceeds 10,000, 100% shall be disallowed under 40A subsection 3. So come in the same order, 40A subsection 2, 40A subsection 3, because those are specific section. Clear? Are you clear with this first point? I am moving into the point number 2. A repair of plant and machinery include 1,80,000 towards replacement of worn out part of the machinery. Some part of the machinery has worn out. கெட்டு போயிடுச்சு. அதை ரீப்ளேஸ் பண்ணியிருக்க, அதுக்கு 1,80,000 rupees செலவு பண்ணியிருக்க. Such expenditure does not increase the future benefit from the asset beyond its previously as a standard of performance. இந்த burn out பார்ட்டை மாற்றினதுனால ஸ்பெசிஃபிக்காக எந்த வேல்யூ அடிஷனும் வரப்போறது இல்லை. முன்னாடி எவ்வளோ யூனிட்ஸ் தயாரிச்சிருந்தியோ அதே யூனிட்ஸ் தான் தயாரிக்க போகிறேன். That means will you treat this 1.8 lakhs as revenue expenditure or capital expenditure? Revenue expenditure. Are you really with me? Which is already debited to? So no adjustment is required. Repair of plant and machinery towards replacement of worn out part of the machinery is fully deductible under 37 subsection 1. What is 37 subsection 1? What is that? General deduction. If 7 condition has been satisfied, you can claim deduction under section 37. Correct? Correct? What are the 7 conditions? Sir, number 1, Expenditure should not be capital in nature. Expenditure should not be personal in nature. Expenditure should be wholly and exclusively for the purpose of business or profession. It should not be any infraction of law. It should not be covered under section 30 to 36. Sir, and it should not be for the CSR activity of the company. Correct earlier. If these conditions are satisfied, then you are supposed to claim deduction under section 37. A strong base should be there in PGBP. PGBP is the hero. PGBP, capital gain, IFOS. Right. So this 1.8 lakhs already debited to P&L account, my dear lovable students. No adjustment is required. Moving to the third part. A sum of rupees 6,000 on account of liability foregone by a creditor. They are coming to 41 subsection 1, remission or cessation of trading liability. Has been taken to general reserve, i.e. it should be credited to P&L account. Correct? Same as charge to revenue account in assessment year 1920. Last year you treat this as an expense by way of purchases. This is last year purchase காட்டியிருக்கேன். இன்னைக்கு வந்து creditor அது வந்து உங்களுக்கு வந்து discount விட்டு தராங்க. So it should அது அப்ப general reserve. Goodbye. So 41 subsection 1 will be applicable. 6,000 should be added. Benefit obtained by remission of liability foregone by creditor is taxable as business income under 41 subsection 1. That is 6,000. Clarity? Sale proceeds of import entitlement. This is part and parcel of section 28, charging section. If you are selling import entitlement, import license, sir, any credit passbook, all those relating to customs, amount of 1 lakh has been credited to P&L account. Goodbye. Which the company claims as capital receipt and not chargeable to income tax. Bad boy. They are already credited to P&L account and they are saying that if you are getting any gain from the import entitlement, it will not be treated as revenue receipt. No, the company is wrong. As for 28 charging section, we are having specific clauses saying that if you are getting any profit from the import entitlement license, it should be treated as PGBP income, right? So no adjustment will be made. Sale proceeds of import entitlement is taxable under section 28. As the amount has already been credited to P&L account, no further adjustment is necessary. I'm moving into the next point. Being also engaged in biotechnology business. Wow. Biotechnology business is an eligible business for the purpose of section 35. Yes, sir. I highlighted. Company incurred the following expenditure on in-house research and development as approved by prescribed authority. Research equipment purchase 1,50,000. As per section 35 subsection 1 class 4, generally for capital expenditure. But this is a company who are engaged in biotechnology. 35 subsection 2AB will be applicable right now. And remuneration paid to scientists is a revenue expenditure. You can claim it as deduction under 35 subsection 2AB. Total amount of 2 lakh is debited to P&L account. You already debited to P&L account. Then what is the problem? No problem. Correct? So my dear lovable students, expenditure incurred by company engaged in business of biotechnology on in-house research qualify for deduction of 100% of expenditure under 35 subsection 2AB. Rupees 2 lakh is deductible expenditure. Therefore, no further adjustment is required. So you have to take in calculator 12,50,000. I will be adding back, sir, 8,000. Under what section I am adding back 8,000? 48 subsection 2. Related party transaction. What amount I have added back? Excessive amount I have added back. Now I am adding back 52,000. As per what section? 48 subsection 3. Why you are adding back? Cash payment exceeding 10,000 or 35,000 as the case may be. Why are you adding back 6,000? Remission or cessation of trading liability. What is the authoritative section? 41 subsection 1. Okay, right. Sir, why you have not adjusted the repair and maintenance? Already debited to P&L account. It's a revenue expenditure. Why you have not doing any adjustment with regard to the scientific research expenditure? Already debited to P&L account and is allowed as per 35 subsection 2AB. So you'll be having a net income of 13,16,000 rupees. Comfortable? Clear? I'm moving into illustration number 3, my dear lovable students. Explain in brief the treatment as to their taxability or allowability under the provisions of Income Tax Act for assessment year 24-25 in the following cases. So they are treating like 1, 2, 3, 4. They have given 4 different questions. Don't think that, sir, like this question and all will be coming in exam. My dear, the last question has been asked in November 2003. I will be doing 20 question minimum of the last 20 attempts. Last 20 attempts, what more you need from this area? The only thing is I can't do this at the start of the class because then I will die. Now after hearing these lectures, you will have a feel that where is my IFIS book, where is my PGB book, I want to revise. That feel I want to give it to you. Explain in brief the treatment as to their taxability or allowability under the provisions of Income Tax Act for the assessment year 24-25 in the following cases. S Limited received a sum of rupees 10 lakh from K Limited on 3rd Jan 2024 for agreeing not to carrying on any business, non-compete fee to computer software in India for next 3 years. This is a non-compete fee. This will be taxable as PGBP income. This is specifically covered in 28. If you don't know the clause, leave it. 28. There itself take you somewhere. Don't write wrong clauses and all. Hello, sir. For that, the TDS has to be deducted under 194J. Right? Super fantastic to the core. What is the answer will be reading? As for section 28, any sum received under the agreement for not carrying any activity in relation to any business that is non-compete fee is chargeable to income tax under the head PGBP. Accordingly, rupees 10 lakh received by S Limited from K Limited for agreeing not to carry any business relating to computer software in India for next 3 years is chargeable to income tax under the head profits and gains of business or profession. I am moving into the second part. Are you clear? Yes, a company had a super question, listen very carefully. Company had an inventory of closing stock of 31/3/2024 at a cost of manufacturing was 50 lakh and excise duty payable was 6 lakh. So, company கிட்ட closing stock இருந்திருக்கு. So, by closing stock எவ்வளோ lakh? 50 lakh. இதிலாம என்ன duty payable also? Excise duty. Excise duty means manufacturing duty. Excise duty means manufacturing duty. Since excise duty was eligible for deduction only on actual payment basis. Why? As per section 43B, any tax, duty, cess or fees payable is the first point we have studied. Hello? The company valued the closing stock at 10 lakhs only. 50 lakhs only. Company has valued the closing stock at only 15 lakhs, saying that this 6 lakh cannot be claimed as a deduction because it can be claimed as deduction only on actual payment basis. The company paid duty amounting to 4 lakh on such stock on clearances up to the date of filing the return. Till 139 subsection return, one return file பண்ற வரைக்கும் 6 lakhs எவ்வளவு தான் பே பண்ணிருந்தாங்க? பே பண்ணிருந்தாங்க. ரைட்டா? Excise duty liability arises at the time of dash of goods. Old story, excise duty, but still excise duty is there. So when you manufacture the goods, you are liable to pay excise duty, and therefore the same has to be included in the value of what stock? As per section 145A. As per section 145A, which is method of accounting, when you are valuing the closing stock, you have to include the inner duty. Therefore, closing stock has to be valued at including excise duty payable of 8 lakh, 6 lakh. As per section 43B, deduction can be claimed of 8 lakh. Being excise duty paid on or before the due date of filing the return. So, we understood two sections by this question. One is 145A. 145A is saying method of accounting, valuation. Sir, you have to value the closing stock including inner duty. Excise duty. What 43B is saying that? Deduction allowed on actual payment basis. So out of 6 lakh, the first item, tax item, you have paid only. So 4 lakh will be allowed as deduction. I'm moving into the third part of the question. P Limited paid 50 lakhs as sales commission for the year under 31/3/2024 without deducting tax at source. Ada pavi. To Mr. R. Teville R. Non-resident who acted as his agent for booking order from various customers who are outside India. Fantastic to the core, fantastic to the core, fantastic to the core. Who is the service provider? Service provider is Mr. R. He is a resident. That means he is situated outside India. Where the customers are situating? Outside India. So service provider is situated outside India. Service has been provided outside India. For that, the money has been paid in India. You have to check whether it will fall under section 9, subsection 1, class 1. Income has been accrued or arisen in India. If income has been accrued or arisen in India, then only that income will be taxable in India. Then only TDS has to be deducted. So whenever question comes, no TDS has been deducted, should be added back. Am I? Are you all really with me? Mr. R, non-resident, has received commission outside India for booking orders from various customers who are outside India. Therefore, no income is deemed to accrue or arisen in India to Mr. R. Section 40A subsection 1 is attracted when commission is paid to a non-resident outside India and such commission is chargeable to tax in India. First, the income should be chargeable to tax in India in the hands of any resident. Since commission is not deemed to accrue in India in the hands of Mr. R, there were no requirement to deduct TDS and therefore disallowance under 40A subsection 1 shall not be. Hence 50 lakh sale commission is allowable as an expenses. Clarity? I'm moving into the part 4. Can the following transaction be covered under 43B for disallowance is the question. What is 43B? Deduction on actual payment. There is a big list. In that big list, whether these items are covered. A bank guarantee given by company towards disputed tax liability. Bank guarantee is not actual cash outflow. That is Yamatham, correct? For claiming deduction of any expense listed under 43B, a requirement stipulated in that section is actual payment and not deemed payment. Furnishing of bank guarantee cannot be equated with any payment. Actual payment requires that money must flow from the assessee to the public exchequer. Public exchequer means government, tension of other, such as specified in section 43B. Therefore, deduction of expense covered under 43B cannot be claimed by merely furnishing bank guarantee as per the Pisa McDonald. Interest payable to sales tax department but not paid before filing the return of income. It is interest payable. Any tax, cess, fees. In that list, is interest is there, not there. In 43B list, interest is there, not there. The amount of interest payable is not form part of sales tax. And therefore, provision of 43B are not attracted in respect of such interest. Because interest payable to scheduled bank, interest payable to financial institution are only there. Interest payable to government is not there. Good. Come on. Therefore, interest payable to sales tax department, which is not paid before the due date for filing return of income, would not attract disallowance under section 43B. Clarity? So, just consolidate this question. Sir, someone has received 10 lakh rupees for non-compete fee. What section? 28. It will be treated as non-compete fee under the head PGBP. Sir, company were having 50 lakh rupees what? Inventory. They were having custom duty payable of 6 lakh. Sir, when you value the closing stock, you have to value including custom duty as per what section? 145A. And out of that 6 lakh, only 4 lakh has been paid. That means only 4 lakh will be allowed as deduction. Remaining 2 lakh should be in the back as per 43B. The next one, you have paid some amount to a non-resident who are situated outside India for providing a service outside India. For that, the income is not accrued or resident in India as per section 9, subsection 1, class 1 or any of the clauses of section 9. Then, my dear lovable students, no need to deduct TDS. Even though no TDS has been deducted, no disallowance will come. I move to the next one. With regard to 43B, my dear lovable students, sir, bank guarantee is not an actual payment. 43B disallowance will come. Interest payable to income tax department or GST department is not covered in 43B. So even though it has not been paid, it can be debited to an account, P&L account. I'm moving into illustration number 4. Good question. From here onwards, we'll be slightly changing the pace of the question and the adjustment in the question. We are little stepping down. XYZ Limited is engaged in manufacturing or textiles since 1/4/2009. They are entitled for addition. Its statement of P&L shows a net profit of 700 lakhs after debiting or crediting of the following item. Net profit as per P&L is evlo lakh, which is 7 kodi. 7 crores is the net profit. Depreciation calculated on the basis of useful life of asset as per the provisions of Companies Act is 50 lakh. Dhairiyam add back paniko. Because depreciation as per the income tax rules is only allowed. So, company means they will be calculating depreciation as per Companies Act. Should be in a back. Normal depreciation calculated as per the income tax rules is at 80 lakhs. So, you have to add back 50 lakhs and you have to reduce 80 lakhs. Have you noted one word? It is only in a depreciation. That means this does not include additional depreciation. So if need, we have to provide extra additional depreciation. Many students will do 50 lakhs, they will add back, 80 lakhs, they will reduce. They will leave the part of additional depreciation, right? Employer's contribution to EPF of 8 lakh. Together with employees' contribution of 2 lakh for the month of March was remitted on 30th June. Sir, they are again talking about 43B implication, correct? Any tax, duty, cess or fees payable, any interest payable to scheduled bank, interest payable to financial institution or NBFC, bonus or commission to employee, leave salary to employee, employer's contribution. Highlight the word. Highlight the word. Employer's contribution. Highlight the word. Employer's contribution for the welfare of the employees. That means under 43B only whose contribution are covered? Employer's contribution are covered. In 43B the benefit is not available to the employee's contribution. If you want to claim it as a deduction, 36 subsection 1 clause 4, 4A, 5, 5A. If you want to claim it as deduction, it should be deposited to the respective account with the respective act time limit. Otherwise we will end back, add it back. So that extra extended time limit will be available for employer but will not be available for employee's contribution. So this 2 lakh should be in the back. Yaroda contribution. But even for that there are different court decisions are there. Even employee's contribution is allowed, but I will not go with that because very clearly said in the act that it has to be disallowed. Correct? So we'll be checking here. Net, because if I read at the end, will not be able to connect the points for you. Net profit as per P&L, what is given? Add items debited to P&L but not allowable as deduction. Depreciation as per Companies Act, how much lakh? 50 lakhs. So every question you check whether the depreciation is as per Companies Act. Company means it will be as per Companies Act. So you have to end back. So are you clear with this adjustment? Now employee's contribution to EPF, since the employee's contribution to EPF has not deposited on or before the due date under the N Act, the same is not allowable as deduction as per explanation 2 to section 36 subsection 1 clause 5A. 36 subsection 1 clause 4, 4A, 5, 5A. 4, 4A, 5. All are employer's contribution. All are employer's contribution. Whereas clause 5A is employee's contribution. Since the same has been debited to statement of P&L, it has to be added back for computing NI income, business income. So I have added back how much lakh? 2 lakh. Sir, every student will write this part in examination, but they may, sir, write this and put a dash. For this half or 1 mark is there, which is Yaroda contribution. As per section 43B, employer's contribution to EPF is allowed as deduction since the same has been deposited on or before the due date for filing return under 139 subsection 1. Since the same has been debited to P&L, no further adjustment is necessary. That means what is the takeaway from this? 2 people's contribution are there. Employer's contribution and employee's contribution. Employer's contribution, my dear lovable students, for that, sir, 139 subsection 1 time limit will be applicable. For employees contribution, 139 subsection 1 time limit will not be applicable. For this respective act, time limit will be applicable. The same adjustment will be repeating for 25 times in examination, in 25 questions. Most of the adjustment will be repetitive in nature. You have to understand what is there. I am moving into the next one, which is adjustment number 4. The company appended a note to its income statement. Income statement means P&L. P&L accounts ku notes to accounts potirukanga. That industrial power tariff concession of 2.5 lakh was received from the NR government and treated same as NR receipt. That means from government they have received a government grant. Government grant. From NR government, state government. Industrial power tariff. Power means it is relating to electricity. It is relating to electricity means it's a revenue item, not a capital item. Correct? It's a revenue item and it is not a capital item. What Income Tax Act is saying? Income Tax Act is saying that even the government grant should also be treated as income. Should also be treated as income. The definition of consideration. Consideration means consideration includes, consideration by, consideration excludes. Consideration excludes government subsidy. That is in GST, not in Income Tax Act. In Income Tax Act, we are having definition of income. There 2 subsection 24 is talking about what is the definition of income. Come on. Industrial power tariff concession received from any government. Any assistance in the form of inter alia concession received from central or any government would be treated as income as per section 224 clause 18. Correct? Since the same has been entered to P&L, no adjustment is required. So any grant you are getting from central government or state government, as per Income Tax Act, it has to be treated as income. It has to be treated as income. And sir, credited to an account, P&L account. Since a company has already credited to what account? Now read it. That point once again. The company appended a notes to its end statement that industrial power tariff concession of 8 lakh was received from any government and treated as same as in a receipt. Capital receipt. Sir, company appended a note to its income statement. Income statement ஒரு note கொடுத்திருக்காங்க. Industrial என்ன tariff concession of 8 lakh was received from the and treated the same as in a receipt. இதுபடி XYZ Limited is engaged in manufacturing of textile. Its statement of P&L shows a after debit or credit of the following items. So these items and all debited or credited to the account. But in notes they are saying that it has to be treated as NA. Is it a capital receipt? No sir. It is a NA receipt. Already credited to what account? Leave it. I am coming to point number 5. Company has provided an amount of 25 lakh being sum estimated as payable to workers based on agreement to be entered in the workers union toward periodical wage revision once in 3 years. Wherever employees are there, problem will be there. They will be creating union. They will say that poraduvom. Even in this company also employees have trade union. They said that we want என்ன revision, wage revision. எங்களால் தான் நீங்க இவ்வளவு சம்பாதிக்கிறீங்க, எங்க உழைப்பு தான் முக்கியம், எங்களுக்கு wage revision கொடுத்து தான் ஆகணும். The provision is based on என்ன estimation? On wage and probable revision. You should understand one thing, in Income Tax Act, no provision is allowed. Provision cannot be debited to what account? But we are having exception, provision for bad and doubtful debts. Provision for? This is allowed for bank as per section 36 subsection 1 clause 7a. Are you all really with me? But other provisions are not allowed, only actual expenditure is allowed. But that means if you are creating general provision for bad and doubtful debts for a normal person, it should be added back. It should be added back. My dear lovable students, but this provision has been created not chumma, it has been created on fair estimation. What is the keyword? Then ICDS, Income Computation Disclosure Standard, accounting standard, standards on auditing. The same way we are also having standard, Income Computation Disclosure Standard. He is saying that, sir, it is allowed. It is allowed. Hello, sir. Provision for wages payable to workers. There has been a wage revision every year. So this is not the first time, every 3 years. Company has formed in 2012. Since the provision is based on N estimation and probable revision, same can be recognized for the purpose of N computation as per BHEL Limited. So this is a specific case law which was there in the statutory update of that attempt. So it has asked as examination question. So for our exam, what will be asked? What is there in your statutory update will be asked. So this can be claimed as a deduction. So no adjustment is required. As the provision has been debited to an account, no adjustment is required while computing the business profit. Clarity? I am moving to the next point. Point number 6. Company has made a provision of 10% of its debtors owed. Should be back. Towards bad and doubtful debts. The company is not a banking company. Sundry debtors of the company as on 31/3/2014 was how much lakh? So 200 lakhs into 10%, 20 lakhs. They have debited to? Should be back? Added back. So I am reading the answer. 20 lakhs should be added back, we know. Provision for doubtful debts, 10% of 20 lakh. Provision for doubtful debts is allowable as deduction under 36 subsection 1 clause 7a. Only in case of bank, public financial institution, state financial corporation, state industrial investment corporation and NFC. Such provision is not allowable as deduction in case of any company. Since the same has been debited to P&L account, it has to be added back for computing business income. Clarity? I'm moving to the next point, man. Point number 7. A debtor who owed the company amount of rupees etana crore was declared insolvent and hence was written off. Allowed, bad debt is allowed. In order to claim deduction under 36 subsection 1 clause 7 5 condition should be satisfied. There should be NSR bad debt. That bad debt should be actually written off in the books of accounts, and you should offer that 40 crores to the income either in the current year or the immediately preceding previous years. Hello? Yes, sir. So you should actually write off in the books of accounts. So this can be allowed as a deduction. Bad debts written off in the books of accounts is allowed plus deduction under 36 subsection 1 clause 7. Since the same has already been debited to P&L account, no further adjustment is required. So 40 crores jolly P&L account debit பண்ணிட்டு போயிட்டே இருக்கலாம். Moving to the next one. Sundry creditors include. Sundry creditors னு கேட்டாலே 41 subsection 1 னு சொல்லிடு. ஓகேவா? Include rupees 50 lakh payable to A and Co towards supply of raw material which remain unpaid due to quality issue. An agreement has been made on 31/3/2024 to settle the amount of discount of 75% of the outstanding. அப்போ total 50 lakhsல எவ்வளவுதான் நம்ம செட்டில் பண்ண போறோம்? அப்படினா 50 lakhs ஓட 75% 37.5 lakhs அப்படினா remaining 12.5 lakhs. This 12.5 lakhs should be treated as at a discount of 75%. So 37.5 lakhs should be treated as income as per section 41 subsection 1, which is the remission or cessation of trading liability. Right? That's the point we are going to read. That point has been missed, I think. Sundry creditors include an amount of 50 lakh payable to A and Co towards supply of raw material which remain unpaid due to quality issue. An agreement has been made on 31/3/2024 to settle the amount of discount of 75% of the outstanding. So, இது வந்து ரன்னிங் அக்கவுண்ட்ல எஃபெக்ட் பண்ணலன்னா சொல்லல. இந்த ஐட்டத்தை எல்லாத்தையும் ஆட்லெஸ் பண்ணி தான் என்ன பண்ணிருக்காங்க? ஆன்சர் கண்டுபிடிச்சு net profit கண்டுபிடிச்சிருக்காங்க. So already credited to an account, P&L account. So no adjustment is required. Opening stock and closing stock for the year were 200 lakh and 250 lakh respectively. They were overvalued by எத்தனை percent? Opening stock overvalue பண்ணா profit கம்மியாகும். Closing stock overvalue பண்ணா profit அதிகமாகும். Right? அப்ப closing stock எவ்வளவு lakh? 250 lakh. Opening stock 200 lakh. 250 இந்த 200 போச்சுனா so 50 lakh closing stock overvaluation. Netta 50 lakh closing stock overvaluation na calculator 50 lakh divided by 110 into 10 போட்டேனா எவ்வளவு வருது? 4.54 lakhs net profit அதிகமா இருக்குமா? So we have to reduce. Yes sir. 50 lakhs into lakhs. Overvaluation of stock 55 lakhs. Sir, what is overvaluation? Opening stock எவ்வளவு? 200 lakh. What is the closing stock? 250 lakhs. யார் அதிகம்? Closing stock 50 lakhs அதிகம். Correct? 50 lakhs அதிகம்னா the amount by which the stock is overvalued has been reduced for computing any income, business income. Rupees 50 lakhs being the difference between closing and end stock, opening stock, has to be adjusted to remove the effect of என்ன valuation, overvaluation. அப்ப closing stock என்ன ஆனதுனால அதிகமானதுனால profit என்ன இருக்கும்? அதிகமாக வேண்டிய அவசியம் இல்லை. You have to reduce it. Sir, how to find out that, sir? 50 lakhs into 10% போட்டா எவ்வளவு lakh? 5 lakh. 50 lakh into 10% போட்டா 5 lakh. 55 lakhs போட்டிருக்காங்க. ஏன்? 50 down. 50 down. 50 lakhs into எத்தனை percent? Sir, in the 50 lakhs overvaluation இல்ல Total including சேர்த்து தான் 50 lakhs. Including சேர்த்து தான் 50 lakhs. Opening and closing stock for the year were 200 lakh and 250 lakh respectively. This is a stock value. Opening stock 200 lakh, closing stock 250 lakh. But இது இருக்க வேண்டிய வேல்யூ விட என்னவா இருக்குன்னா அதிகமா இருக்கும். ஓகேவா? They were overvalued by எத்தனை percent? 10%. அப்போ இந்த 250 lakhs minus 200 lakh, 50 lakhs is the overvaluation. 50 lakhs அதிகமா இருக்கு. ரைட்டா? உங்களுக்கு வேணும்னா 250 divided by 110 into 10 அப்படின்னு போடுங்க. ஏன்னா 100% இருக்க வேண்டியங்க 10% என்ன சார் 10% அதிகமா இருக்கா? அப்ப 250 divided by 110 into 10 போட்டேன்னா எவ்வளவு வருது? 22.72 lakhs. இதே இது ஓப்பனிங் ஸ்டாக்ல 200 divided by 110 into 100 போட்டேன்னா எவ்வளவு வருது? 18.18. 22.72 minus 18.18 na 4.54. This is what I already calculated. 50 divided by 110 into 10. So 50 divided by 110 into 10 comes to 4.54. This is the right answer. That 5 lakh is wrong. Mathematically calculation is wrong. Okay, wow. We have to change it. 4.54 lakhs has to be reduced. I'm moving to the next adjustment. Right. Provision for gratuity based on actuarial valuation 5 crore. As per 40A subsection 7, provision for gratuity should be added back. Actual gratuity paid was 3 crore. From 5 crore, reduce 3 crore, remaining 2 crore should be added back. As per 40A subsection 7, which is N for gratuity. Provision for gratuity of 500 lakh for gratuity based on actuarial valuation is not allowable as deduction as per 40A subsection 7. However, actual gratuity of 300 lakhs paid is allowable as deduction, and the difference has to be added back. So 200 lakhs will be added back. Moving to the next part. Commission of 1 lakh paid to a recovery agent for realization of debt. Tax has been deducted and remitted as being chapter 17B of the act. Then why are you talking no disallowance? Hello sir. No problem with regard to the TDS part. Which point is talking about TDS? Commission paid to recovery agent for realization of debt. Commission of 1 lakh paid to recovery agent for realization of debt is an allowable expenditure under what section? Since same has been debited to P&L, no further adjustment is required. Clarity. The next point. Company has purchased 500 ton of industrial paper as packing material at a price of euro rupees per ton. From PQR, a firm in which majority of the directors are partners. That means related party, correct? PQR's normal selling price in the market for the same material is 28,000 ton. So 30,000 to 28,000 per ton pochina, 2,000 per ton they have paid over and above market price. Should be back. As per 40A subsection 2 related party transaction. So 2,000 per ton into how much ton? 500 ton comes to 10 lakh should be added back. That is the next adjustment. 10 lakh should be added back. Purchase of paper at a price higher than the fair market value as per 40A subsection 2. Difference between the purchase price 30,000 per ton and fair market value 28,000 per ton multiplied by the quantity purchased 500 ton has to be added back since the purchase is from a party. That is a firm in which the majority of the directors are partner at a price higher than the market value. That's what 10 lakh is all about. Right? That's it. All the normal adjustments has been given. Additional adjustment means these items has not been debited or credited to P&L account. If need, we have to do that. Correct? There was an addition to plant and machinery amounting to 50 lakh on 10/6/2023, more than 180 days, entitled for additional depreciation at the rate of. So 50 lakh into 20% comes to. So you can reduce 10 lakh as any depreciation under section 32 subsection 1 class 2. Yes sir. Additional depreciation at 20% is allowable at 50 lakhs being actual cost of new plant and machinery acquired on 10/6/2021. Assuming that the same is put to use for more than 180 days in previous year 22-23, our previous year 23-24. Since additional depreciation has not been computed, same has to be deducted while computing NI income, business income, rupees 8 lakh, 10 lakhs. Can we claim it as a deduction? Company has credited as subcontractor an amount of 8 lakh on 31/3/2024, which is last year. Last year 8 lakhs they paid. towards repairing a machinery component. Tax so deducted was remitted on 31/12/2023. So last year 30% would have been disallowed. So 8 lakh into 30% comes to 2,40,000. So 2,40,000 would have been disallowed last year. Since this is the actual year of payment, you can claim it as a deduction. So 2,40,000 in the version number less panikalam. That's what NSR here. Where it is. Is the subcontract part? No. Payment to a subcontractor where tax deducted last year was remitted after the due date of filing return. 30% of rupees. 8 lakhs. 8 lakhs. So they have changed the question to 10 lakhs. Okay, wow. 10 lakhs for 30% are 3 lakhs. So question also will make to 10 lakhs question. Being payment to a subcontractor would have been disallowed under 40A subsection 1A while computing the business income of assessment year 23-24. Since tax deducted was remitted after the date of filing of return. However, the same is allowable in assessment year 24-25 since a remittance has been made on 31/12/2023. So instead of 8 lakh, we will make it as 10 lakh. But 10 lakh into 30% which comes to 3 lakhs. So 3 lakh should be allowed as deduction in the current year. Are you really with me? So 10 lakh into 30% comes to 3 lakh. Company has collected 7 lakh as GST from its customer and paid the same on due date. 7 lakh rupees GST in solli customer kitta vaangi government pay pannanga. However, an appeal made, High Court directed department to refund 3 lakh to the company. Sir, 7 lakhs kattirukanga, adha 3 lakhs company ke thirupi kuduthanga. Company in turn refunded 2 lakhs to its customer. In the 3 lakh la 2 lakhs yaar kuduthanga? From whom the amount was collected and the balance 1 lakh is still lying under the head NL liability. Compute the total income and tax payable, ignore MAT provision is what the question. This 1 lakh, that is 3 lakh minus 2 lakh, 1 lakh balance circle here. This 1 lakh should be treated as remission or cessation of trading liability. This is an income in the revenue front, so it has to be added to the net profit, my dear lovable students. GST not refunded to customer out of GST refund. The amount of GST refunded to the company by government is a revenue receipt chargeable to tax under 41 subsection 1. Deduction can be claimed for the amount refunded to customer. Hence the net amount is 1 lakh. So would be chargeable tax. So 1 lakh should be added to the net profit. Right? They want net profit as per P&L account. Now everyone take your calculator. We are going to redo this sum in the calculator. You have to help me whether I have to add or less. I'll be finding out the answer here. What is the net profit as per P&L? 700 lakhs. So 700 lakhs is a net profit as per P&L. Depreciation calculator on the basis of useful life of the asset as per the provisions of Companies Act should be added back. So I'm adding 50 lakhs. You also add in your calculator 50 lakhs. Sir, come along with me. Normal depreciation calculator as per the income tax rules 80 lakhs. Less how much lakh? 80 lakh. Reduce 80 lakh. Sir, don't wait in examination. You write mean, but I am doing only the NSR mathematical adjustment. Company appended a note to its income statement that industrial power tariff concession of 2.5 lakh was received from state government and treated as capital receipt. No adjustment is required because already credited to P&L account. But in note they are saying that, sir, it has to be treated as NA receipt, capital receipt, right? But this is NA account credit we would have NA back, added back, right? So no adjustment is required. I'm leaving this point. Company has provided an amount of 25 lakh. Oh, I missed that point. Sorry. Employer's contribution to EPF of rupees 2 lakh together with the employee's contribution of 2 lakh for the month of March was remitted on 3rd June. Sir, whose contribution is allowed? So I should add back 2 lakh because 43B time limit are applicable only for, not for, coming to 4th point. Company appended a note to its income statement that industrial power tariff concession of 2.5 lakhs was received from state government, treated as same as capital receipt. But they have credited to what account? P&L account. Hence, no adjustment is required. Company has provided an amount of 25 lakh being sum estimated as payable to worker based on agreement to be entered with worker upon towards periodical wage revision once in how many years? The provision is based on fair estimation on wage and probable revision. Right? Yes, sir. Sir, XYZ Limited is engaged in manufacturing of what business? On 1/4/2009. 1/4/2009? Is 3 years over or not over? So many years over. That is why it is allowed as a reduction. Because they said that it is in every how many year? 3 years. Wage revision in 3 years. இதே இது கம்பெனி போன வருஷம் தான் ஆரம்பிச்சிருக்காங்க. எவ்ரி வேஜ் ரிவிஷன் 3 இயர்ஸ் சொல்லி பிஎன்எல் அக்கௌண்ட் ஏதாவது டெபிட் பண்ணா should be added back. 3 லட்சம் மாதிரி. புரியுதா? That's why the year of inception has been given in the question. So this is allowed. So நான் இது add back பண்ண வேண்டிய அவசியம் இல்லை. Company has made a provision for 10% of its debtors should be added back. Add back 20 lakh. Debtor who owed the company an amount of 40 crore was declared insolvent, no problem because already debited to sundry creditors 50 lakhs. 75% has been waived. This has been already credited to P&L account. So no adjustment is required because these items are already debited or credited to P&L account. Right up. Opening and closing stock for the year 200 lakhs and 250 lakhs. Hello sir. They were overvalued by 10%. Sir, answer this in this figures has been changed. Okay, wow. But we will go with the question. Then 50 lakhs is the closing stock extra. So 50 lakhs divided by 110 into 10. Sir, how much should be reduced? 4.54 lakhs should be reduced. Provision for gratuity 5 crore minus 3 crore. Sir, I should add back how much crore? 2 crore should be added back. Sir, commission of 1 lakh, no problem with the TDS, no issues. Sir, extra payment, sir, excessive payment 10 lakh should be added back. So add 10 lakh. Then there was addition to plant and machinery 50 lakhs into 20%, 10 lakhs has to be reduced. Then commission of 1 lakh paid to recovery. Sorry. Company has credited a subcontractor. It amount is 10 lakh. 10 lakh into 30% already would have been disallowed. So on the 3 lakhs has to be claimed as a deduction. So minus 8 lakh, 3 lakh. Then company has collected 7 lakhs as GST paid to the department. Get it as refund 4 lakh. But 3 lakh has been distributed to the people. Still they are keeping 1 lakh. Correct? So that 1 lakh should be treated as remission or cessation of trading liability. If you add or less whatever item, you'll be getting the total income. Like this only, this is an ICA question, my dear lovable students. Like this only, you'll be getting a 14 mark question. And sir, total income is 8 crore 85 lakh. 8 crore 85 lakh. What was the P&L? 7 crores. It become 8 crore. Computation of tax liability of XYZ Limited for the assessment year 24-25. Compute total income and tax liability of assessment year 24-25. Ignore MAT provision and provisions of 115 BAA. Concessional rate of tax. If they are manufacturing company, 115 BAA, we have already completed. Right. Turnover of X Limited previous year 21-22 was 405 crore. More than 400 crores. That means how much percent? 30%. So 8 crore 85 lakhs into 30% comes to 2 crore 65 lakh 50,000. Taxable. Is the company's total income exceeds 1 crore? Yes sir. Is it within 10 crore? Yes sir. Then surcharge will be applicable at the rate of into sir 7% comes to 1 crore 85 lakh sir 18 lakh 58,500. Total you will be getting into 104%. You will be getting the total tax liability of the company. Are you comfortable? Like this only a 14 mark question will be coming in examination. This is a past examination question which is there in the ICA study material. This is how they will be testing the first 14 mark question. I will be doing the last question for the day. Illustration number 5. If you done the illustration number 5, the same length will be there. It is a big question, very big question. Illustration number 5. With that the slot 1 of the computation of normal root comes to an end. In our book itself 10 question I have given. In addition to that, I will be doing 10 question as extra question. Hello? When I move to the second part and all, sir, you will be feeling so much comfortable provided you are very thorough with the part number 1. Parikh Hospitality, sir, it's a very important question, good question. ICA question, November 2015 question, the attempt in which I wrote. I got 14 mark in examination. That's why I have passed. It was an easy question for me at that time. Parikh Hospitality Limited, because if I am not wrong, I got 68 or 64 in tax. One is 64, other is 68. Direct and indirect. I think indirect tax is more, I don't know. Parikh Hospitality Limited is engaged in business of running hotel of 3-star category, more than 2-star category, specified business under section 35AD. All these things should be NSR, strike in your brain. Company statement of P&L for the year ended 31st March 2023 shows a net profit of 152 lakhs after debiting or crediting the following items. So these items has been debited or credited. So what is the net profit as per P&L? 152 lakh. Payment of 0.25 lakhs, that is 25,000. 0.30 lakh, that is 30,000 in cash. 40A subsection 3. On 3rd December 2023 and 10 December 23, that means on 2 different days, in a single day to a single person, yes sir, for purchase of crab, lobster and squid, Mr. Raja, a fisherman, covered in rule, and Mr. Khalid, a middleman, not covered in rule. For this product respectively, that means 25,000 is allowed, but 30,000 should be added back. That's what our first adjustment. I'll be reading correspondingly. The payment to a middleman for purchase of crab amounting to 10,000. Under section 48 subsection 3, disallowance is attracted in respect of expenditure for which cash payment exceeding 10,000 is made on a day to a person. Payment of rupees 25,000 to fisherman for purchase of crab is covered under Rule 6DD. Our payment of 30,000 to middleman for purchase of crab is not covered under exception Rule 6DD. Hence 30,000 should be in the back. Straightforward adjustment, nothing more, nothing less. Contribution towards employees pension scheme notified by central government under 80 CCD for a sum of 3 lakh. Calculated 12%. It is maximum 10% is allowed. Correct? Of basic salary and DA payable to employees. So 3 lakh divided by 12% into 2%. So 3 lakh divided by 12 into 2. How much extra? 50,000 should be added back. Because as per the limit, only up to 10% is allowed. Abdiya sir, Abdidan sir. Contribution towards employee pension scheme in excess of 10% of salary is disallowed under 48 subsection 9. Contribution to unrecognized fund. Contribution to extent of 10% of salary, basic salary plus DA, if it form part of pay for retirement benefits, is allowable under 36 subsection 1 clause 4A. In this case, it is presumed that DA form part of retirement benefits, so that extra 50,000 should be added back. Payment of 6.5 lakhs towards transportation of various material procured by one of its hotel to Mrs. Bansal Transport, a partnership firm, without deduction of tax at source. The firm has furnished its PAN number in the tender document. This is an exception to section 194C. Already we have discussed in the TDS chapter. If you are making any payment to sir GTA, where they are sir providing the PAN and declaration saying that we are not owning more than 10 heavy goods vehicle or heavy goods vehicle, then no need to deduct TDS because they will be traveling through the presumptive taxation route under section 44A. Correct? Solda pay. Payment to transport contractor without deduction of tax. No tax is required to be deducted under 194C in respect of payment to transport contractor if the contractor does not own more than 10 goods carriage at any time during the previous year and furnish a declaration to this effect and his PAN number. In this case, it is presumed that contractors given the above declaration and PAN, and therefore no TDS is required to be deducted in respect of payment of 6.5 lakhs made for transport of material. Hence, no disallowance under 40A subsection 1A would be attracted in this case for non-deduction of tax at source. Nothing will be disallowed in a PA. Super PA. I'm moving into the next one. Profit of rupees 12 lakh on sale of a plot of land. Profit means, my dear lovable students, it should be capital gain because the asset is a capital asset. Then it should not be credited or debited to the P&L account. You have to treat it separately. To Avimanyu Limited, a domestic company, entire shares of which are held by associate company. Oh, wow. Transaction between holding company and subsidiary company. As per section 47 clause 4 of the Income Tax Act, any transfer of capital asset by a holding company to its wholly owned subsidiary company will not be regarded as transfer. Capital gain cut away India. So the plot was acquired by Parikh Hospitality Limited on 1st June 2022. So this profit should not be credited to P&L account. First, it has to be removed from the P&L account for the purpose of computing the correct PBGP. Hello, sir. And it has to be shown it under the capital gain, and nothing will be taxable under capital gain because of section 47. Transaction not regarded as transfer. They started mixing PGBP, capital gain, IFOS. It will be a combination of that. That is why 14 mark. Hello. Everything has been discussed detailed in depth. And the book again. Profit on sale of plot at 100% subsidiary company. Long-term capital gain arises on sale of land held for more than 24 months. Sir. However, in this case, since the transfer is for 100% subsidiary company and subsidiary company is an Indian company, same would not constitute a transfer for levy of capital gain as per 47 clause 4. Since this amount has been credited to P&L account, same has to be deducted for computing business income. So that 12 lakh has been reduced. Super fantastic, sir. I'm moving to the next one. Contribution of rupees 2.5 lakhs to IIT with a specific direction for use of the amount for scientific research program approved by prescribed authority. It is allowed. As per section 35 If you are contributing to IIT, National Laboratory, University, 100% of the expenditure debited to P&L account will be allowed as a reduction. They are debited 100%. No need to do anything. It is allowed. Hello. Yes, sir. Yes, the point is here. Contribution to IIT for scientific research. Contribution to IIT for scientific research program approved by prescribed authority qualify for deduction at 10%. Under section 35 subsection 2AA, it is contribution to outsiders. Since the amount of contribution has already been debited to P&L account, there is no further adjustment is required. Clear? I am able to recall how I have solved this question when I was in examination hall. Expense of rupees 10 lakh on foreign travel of 2 directors for a collaboration agreement with a foreign company for a brewery project to be set up. The negotiation did not succeed and the project was abandoned. You just think. Now, what is SSC doing? The SSC is Parikh Hospitality Limited in the business of hotel. Now they went to foreign to start a new hotel, but it is not a hotel, it's a brewery project. Is the new business connected with this business? No, sir. So whatever expenditure has been incurred for the new business will not be allowed as a deduction for this business. Should be enna back. தைரியமா 10 lakhs என்ன பண்ணிக்கோனா add back பண்ணிக்கோ. Are you all really with me? Sir, expense on foreign travel of 2 directors for collaboration agreement which failed to materialize. Where such expenditure is incurred for a project not related to the existing business on the project was abandoned without creating a new asset. Expense is capital in nature. Brewery project, that's what the question highlight, is not related to the existing business of running in a star hotel. So that 10 lakhs should be in the back. I'm coming to the point number 7. Fees of rupees 1 lakh paid to independent director for attending board meeting without deduction of TDS under 194J. 30% will be disallowed, 30,000 will be added back. Appreciate Pandriya. Fees paid to director without deducting tax at source 30% of 1 lakh. Disallowance at 30% would be attracted under 40A subsection 1A for non-deduction of tax at source from director's remuneration on which tax is deductible under 194J. 30,000 rupees is the amount. Hello, sir. Depreciation charge 10 lakh. Dairima add back paniko. Rupees 10 lakh being additional compensation received. Oh my God, they are moving into 45 subsection 5. Compulsory acquisition of land and building, original compensation, additional compensation. Original compensation will be taxable in the year of the first receipt. Whole amount is taxable. Whereas additional compensation will be taxable in the year of actual receipt. Whereas interest on additional compensation will be taxable under the head income from other sources. Yes, sir. With a flat deduction of 50% as per section 57 clause 4. Come on. Rupees 10 lakh being the additional compensation received from the state government pursuant to an interim order. I already highlighted that. Interim order, put it on dustbin. Only the final order is matter. In respect of land acquired by state government in previous year 21-22. First of all, this is not a PGBP income. It has to be removed and it should be shown under the head capital gain. But this compensation has been received on account of an interim order and not a final order. Even it will not be taxable even in the capital gain. So this 10 lakh should be removed. Additional compensation received from state government. Since additional compensation has been received pursuant to a dash order, same would be deemed as income chargeable to tax under the capital gain in the year of final order as per 45 subsection 5. Since the compensation has been credited to statement of P&L, same has to be deducted while computing business income, which is 10 lakh. So I have removed that 10 lakh. Dividend received from a foreign company 5 lakh in which it owed 15% of the equity share capital. Dividend will be taxable under the head NOS, IFOS. So this 10 lakh, 5 lakh has been credited to an account, P&L account. So whether I have to remove that 5 lakh? So sir, dividend received from a foreign company. Dividend received from foreign company is taxable under the head NOS. Since the said dividend has been credited to statement of P&L, same has to be deducted while computing business income. So I have reduced the 5 lakh. So these are the item which is already adjusted with the P&L. Normal adjustment, man. Nothing new, nothing is there. It was the most luckiest person in 2015 to get this question to get 14 mark. Additional information. As a corporate debt restructuring, 43 BR account, a bank was converted unpaid interest of 10 lakh as on 31st March 2023 into a new loan repayable in 5 equal installments. Right up. So 10 lakhs divided by 5 comes to 2 lakh. The first installment of 2 lakh was paid in March by debiting new loan account. So 2 lakh has to be reduced from the net profit as 43B adjustment. Correct? Yena out of 10 lakhs, evlo lakhs தான் pay பண்ணிருக்காங்க? 2 lakhs. அது எதிலிருந்து கம்மி பண்ணிருக்காங்கன்னா அப்ப balance sheetல கம்மி பண்ணிருக்காங்க இல்லையா? Conversion of unpaid interest into loan shall not construed as payment for interest for the purpose of section 43B. amount of unpaid interest converted into new loan will be allowable as deduction only in the year in which such converted loan is actually paid. Since rupees 2 lakh has been paid in the previous year 22-23, same is allowed as a deduction. Right? Depreciation as per Income Tax Act 15 lakhs. You have already added back the depreciation as per Companies Act. So this 15 lakhs has to be reduced. Company received a bill of 2 lakh on 31st March 2024 from a supplier of vegetable for supply made in March 2024. The bill was omitted to be recorded in the books on March 2024. Bill was paid in April 2024 and necessary entry was made in the books then. Have they said that they are following cash system?
No, sir.
In the month of the question, have they said that they are following cash system? So this 2 lakh bill has not been recorded. If this 2 lakh bill has not been recorded, will the net profit be correct? Not correct. Not correct. So purchase omitted to be recorded in the books. Since the purchase is made in March, that is previous year, sir, 23-24, our previous year, in respect of which bill of 2 lakh received on 31-3-2023, which has omitted to be recorded in that year, it has to be deducted to compute the income. Because கண்டிப்பா purchase book பண்ணலனா net profit அதிகமா இருக்கும். அதிகமாக கூடாது. கரெக்ட்டா இல்லையா? Accrual systemத்துல நம்ம less பண்ணி தான் ஆகணும். அடுத்த மாசமோ அடுத்த வருஷமோ எப்போ வேணா பே பண்ணிக்கோ. It is logical to assume that company follow என்ன system of accounting. இவ்வளோ பெரிய கம்பெனி கேஷ் சிஸ்டம் ஃபாலோ பண்ண மாட்டாங்க. என்னதான் ஃபாலோ பண்ணுவாங்க? So that 2 lakh can be reduced. ஒரு பில் புக் பண்ண விட்டுட்டாங்களாமா அந்த பில்லை நீ இப்போ புக் பண்ணிக்கோ. Dividend of 7 lakh is distributed on 25/9/2024 to its shareholder, shareholder. 7 lakh rupees அவங்க என்ன கொடுத்திருக்காங்கன்னா dividend கொடுத்திருக்காங்க. குடு தாராளமா குடு. It will be treated as income in the hands of the shareholder. No DDT also in the hands of the company. Correct? Compute total income of Parikh Hospitality for the assessment year 24-25, indicating the reason for treatment of each item, assuming the company is not eligible for deduction under 35 AD. So 2 star அந்த மாதிரி ஒரு மண்டை பிச்சுக்க வேண்டிய என்ன இல்ல அவசியம் இல்ல. Ignore the provisions of 115 BBA. Hello. Concession rate of tax க்கும் போக வேண்டிய அவசியம் இல்ல. So what is the net profit as per P&L? 152 lakhs. Sir, confirm it. Middleman எதை add back பண்ணு? Middleman ஓட எவ்வளவு rupees? அப்ப calculator 150 lakhs போட்டுக்கோ, 152 lakhs போட்டுக்கோ plus 30,000 போட்டுரு. Then contribution towards employee in excess of 10%. It will be added back as per 48 subsection 9. Correct? How much? 50,000 add back பண்ணு. Payment to transport contractor without deduction of tax at source. எது add back பண்ண வேண்டிய? It's an exception to 194C. Contribution to IIT for scientific research. எது add back பண்ண வேண்டிய? Expense on foreign travel of 2 directors for dash project. Weavery project. Not connected to this business. 10 lakh should be in the back. Added back. Fees paid to directors without deducting TDS. 30,000 should be added back. You will get a subtotal of 1,63,10,000. Less sir, you have sold one land which is a capital gain income, so it has to be removed while calculating PGP and you have to show it as capital gain, but this has been not regarded as transfer. So minus how much lakh? 12 lakh. Depreciation as per the income tax rules, how much lakh? Netta they have done. So we have added back illa. So எவ்வளவு lakhs? 10 lakhs வந்து company sector. Yes sir. Income tax act 15 lakhs. So net 5 lakhs. So they have reduced the 5 lakh. So minus 5 lakhs. You can add back 10 lakh and you can reduce. That is a good method, correct method. All right. Additional compensation received from state government. This has to be taxed under the head capital gain, but this has been credited to P&L account. That too in the year of final order. So you can remove to பண்ணி விட்டு எங்க tax பண்ணாத. Dividend received from foreign company will be taxable under the head IFOS, but they have credited to P&L account, so you have to remove it. Interest paid during the year, sir, out of 10 lakh converted loan, 2 lakh interest has been paid. This would have nowhere adjusted in the P&L account. You have to manually reduce the net profit, so you have to reduce the 2 lakh. Purchase omitted to be recorded. We are assuming that the company is following accrual system. If purchase bill has not been recorded, my dear lovable students, it won't show the correct profit. So we have to reduce 2 lakh. You'll be getting income under the head PGBP 1,27,10,000. Capital gain, profit from plot of land to 100% subsidiary, short-term capital gain arising on sale of plot for less than 24 months. However, in this case, since a transfer to a 100% subsidiary company and the subsidiary company is a same would not constitute a transfer for levy of capital gain under 47 clause 4. Additional compensation received from state government. Since additional compensation has been received pursuant to a dash order, same would be deemed as income chargeable tax under the head capital gain in the year of dash order is passed. As per 45 subsection 5. Paka. Dividend received from foreign company will be taxed under NOS. GTI, gross total income, you have to add it. Less deduction under chapter 6A, ATM, in respect of intercorporate dividend, to the extent of dividend distributed by it on or before the due date under 139 subsection 1 of filing the return of income. Correct? Yes, sir. Because they got dividend from foreign company. How much?
5 lakhs. 5 lakhs.
5 lakh. They distributed dividend to its shareholders. 7 lakh. So out of that 7 lakhs or 5 lakhs, whichever is lower, can we claim it as deduction under ATM? Good. Intercorporate dividend. Good. Tishk. This is 5 lakhs. So total income is 1 crore 32 lakh 10,000. Clarity? Perfect. So my dear lovable students, with this actually computation of total income, 14 mark area, 5 question comes to an end. We will be doing one more slot tomorrow. Illustration number 1 we are having. This is a November 2004 question. We will be doing, hello sir, question number 2, Siddharth Electricals Limited. This is a November 2008 question. We will be doing third question, question number 3, Lakshmi Tea Limited. Good question. This is November 2009 question. We will be doing illustration number 4, XYZ Private Limited. This is November 2011 question. We will be doing the last question, the 5th question, which is profit and loss account of ST Private Limited. This is asked in May 2013. So these are the 5 questions. One more slot I am having from the total income. We may take today, tomorrow, and maybe sir one more. But this chapter is the hero. This chapter is the key to success. Hello sir. Don't leave this chapter, my dear lovable students. Today itself you sit and do the 5 questions from computation of total income. 5 questions once you go through, 15 mark is over. Your 45 mark of your preparation, 30 mark is there in the MCQ part and 15 mark is there in the computation of total income part. I usually used to say the direct tax is a 45-55 game. 45 means 45 mark has been kept in MCQs and 15 mark has been kept in computation of total income. Out of that 45, if you are able to do at least a 30 mark really, then remaining, sir, 30 can pick from that area. I want mandatory you to take the book, do the sum, be comfortable in the 5 questions, because the next 5 questions will be different level. If you want to cope up that 5 question, my dear lovable students, you have to sit, read, do this 5 question, then you will be feeling so much comfortable. We'll meet you at the appropriate time to solve the next 5. Till that, thank you and bye-bye from ANM.